Right now, NVIDIA is facing turbulence in the market. But behind the short-term noise lies a long-term story that's too important to ignore. While traders and headlines react to dips, rumors, and charts, some experts like Ives are zooming out, and what they're seeing is far more optimistic. They believe NVIDIA is not just another stock in the tech sector. It's the backbone of the AI revolution, and the recent volatility might just be hiding one of the biggest buying opportunities of the decade. NVIDIA's stock has dropped close to 8% this March, sparking concern across the financial world. Headlines point to export controls, weakening demand, and fallout from DeepSeek's open-source AI model. But is that really what's going on beneath the surface? According to Ives, not even close. He says the long-term thesis for NVIDIA is stronger than ever, and the market is completely misreading the signals. Let's start with the demand story. Right now, NVIDIA's supply is struggling to keep up with demand, and not slightly. According to Ives, for every chip NVIDIA produces, there are 15 orders waiting to be filled. That's a 15 to 1 demand ratio. This isn't typical supply chain pressure. This is a clear sign that we are entering an AI supercycle, and NVIDIA is at the center of it. What's driving this demand? 2 words: physical AI. This refers to the kind of artificial intelligence that goes beyond digital prompts and chatbots. We're talking about autonomous robotics, machines that interact with the physical world, and self-driving systems that make real-time decisions. These are the building blocks of the next industrial transformation, and all of them need powerful chips to operate, specifically NVIDIA's chips. And it's not just one sector. Companies across industries are looking at NVIDIA as the engine for their future. Whether it's General Motors building autonomous driving platforms, healthcare systems deploying AI diagnostics, or manufacturing companies turning toward robotics, there's a common denominator: NVIDIA's hardware. And that's not a maybe. That's already happening. Still, the market seems stuck on fear. One of the biggest overreactions came from the DeepSeek story. Their open source R1 reasoning AI caused confusion and sent NVIDIA stock spiraling down by hundreds of billions in market value. But as Jensen Huang later clarified, this was actually good news for NVIDIA. R1 is a reasoning model, one that requires 100 times more computational power than traditional models. That means more demand for NVIDIA's chips, not less. The market simply misunderstood. This brings us to the core issue: short-term thinking versus long-term vision. Yes, NVIDIA's stock has dipped. Yes, geopolitical uncertainty is real. But the broader reality is this: NVIDIA is building the infrastructure for the next generation of AI. Not just training data models, but powering autonomous robots, enabling AI in physical systems, and supplying the chips for national-scale AI platforms. That's not a quarter-by-quarter story. That's a generational shift. According to Ives, NVIDIA's leadership in AI is so clear and so far ahead that it's no longer a question of competition. It's a matter of how fast others can rent space in a world NVIDIA already owns. He even went as far as saying that in the next 9 to 12 months, NVIDIA's stock is likely to have a 2 in front of it, meaning a price of over $200, possibly much higher. And that isn't speculation. That's a bet backed by real demand, clear roadmap execution, and deep integration across nearly every AI use case. But we also have to talk about perception, especially around Tesla and Elon Musk, because NVIDIA and Tesla are often discussed together in the AI ecosystem. Tesla's stock has also taken a beating recently, down 23% in a single month. There are brand concerns, political controversies, and growing competition, particularly from BYD in China. Posters across London criticizing Elon Musk have raised questions about Tesla's reputation and future in global markets. Yet, even here, Ives remains cautiously optimistic. He sees Tesla and NVIDIA as 2 of the most important players in shaping autonomous robotics and AI. Yes, Musk's political visibility creates distractions, but the underlying technology still holds enormous potential. If Musk can refocus, pull back from the headlines, and return to being Tesla's full-time visionary, the company still has what it takes to be dominant in the space. According to Ives, the next 4 to 6 weeks could be critical for Musk. If he can stabilize Tesla's public image and leadership strategy, the brand can recover and thrive. But if he doubles down on political posturing and further alienates parts of the public, the brand risks becoming more of a political symbol than a tech leader. Meanwhile, companies like BYD are thriving. They're proving that the Chinese EV and robotics industry isn't slowing down. In fact, it's becoming more competitive than ever. But this isn't a zero-sum game. Tesla and BYD can both succeed. What matters is who provides the foundational technology that supports all of it. And in that domain, NVIDIA is still unmatched. NVIDIA's chips are not just powering autonomous vehicles. They're powering robotics labs, AI factories, and even smart cities. Their architecture is designed to enable real-time reasoning, simulation, and decision-making. These capabilities are essential for any serious AI deployment, whether it's a robot in a warehouse or a car navigating city streets. What's more, NVIDIA is expanding into virtual training. Through platforms like Omniverse, they've created environments where robots can be trained digitally before ever entering the real world. This is a game changer for efficiency, safety, and scalability. It means you can build smarter systems faster and at a lower cost. And NVIDIA is already thinking several steps ahead. Jensen Huang has proposed that the U.S. create a national AI infrastructure reserve, a pool of compute power that would allow researchers, students, and startups to access world-class AI resources. Think of it like a national energy grid, but for intelligence. This proposal shows how NVIDIA isn't just building chips. It's shaping national policy, research, and strategic advantage. Despite all this progress, NVIDIA is still facing strong headwinds in the market. Some traders are using zero-day options to bet against it. Others are amplifying negative technical patterns to create short-term pressure. It's what Jim Cramer called a nuclear bear attack, where fear spreads faster than fact, and even great companies get dragged down. But if you take a breath and look at the bigger picture, the opportunity becomes clear. NVIDIA's chips are still in record-breaking demand. AI adoption is still accelerating, and their technology roadmap is stronger than ever. Whether it's autonomous robotics, physical AI, reasoning models, or national-scale infrastructure, NVIDIA is not just involved, they're leading. Dan Ives believes this is the beginning of a much larger surge, not just for NVIDIA, but for the entire AI economy. He sees this pullback as a buying opportunity, a moment where market perception is out of sync with technological reality. And if history is any guide, the market will catch up. The key is patience. If you're invested in NVIDIA for short-term gains, this volatility might scare you. But if you're here for the long-term transformation of AI, robotics, and infrastructure, then this is a moment to watch closely, not run from. So what's the takeaway? The AI race is on. The demand is real. The future is already unfolding, and NVIDIA is still at the center of it. If you found this breakdown insightful, make sure to like this video, subscribe to the channel, and turn on notifications. We'll keep bringing you the latest deep dives into the tech giants shaping tomorrow. Thanks for watching, and we'll see you in the next one.